Welcome, Senator Cardin.
Michael, first of all, thank you very much for the invitation. I appreciate it very much. I was listening to your go through the advantages of a consumption tax versus an income tax in the international scene. But let me start first where we are in the United States. We are in serious discussions on Capitol Hill about tax reform. The President's budget recommends certain types of business tax reforms and certain relief for individual taxpayers. There is a great deal of interest to see exactly how we can reform our tax code. There are several fundamental principles that I think almost all members of Congress agree are needed to be included in any proposal that would reform our tax code. First, it needs to be fair, and by that we mean we don't want to increase the burden to middle-income working families. We like to reduce the tax burden for middle-income working families. In other words, we want the tax code to be at least as progressive as the current tax code, if not more progressive than our current tax code. Secondly, we want to make sure that whatever we do is fiscally responsible, that it raises the revenues that we say it's going to raise, it won't add to the deficit, that it has a reliable and predictable revenue flow in order to meet the needs of government. Third, we would like to simplify our tax code, make it easier for compliance, less costly for compliance, more predictable for tax preparers so that they know what the rules are, they can comply with it, and they can do it in a lot easier way than they can today. And fourth, we want to make sure that the tax reform is pro-growth, that it not only increases jobs and job opportunity here in the United States, but increases real job wage growth in this country so that Americans can prosper from their tax code. Now, the last time we talked about this in real earnest and got something done was the 1986 tax reform bill. And a lot of what you're hearing today is very similar to what you heard in 1986. It looked at the current code and see how we could reform within the context of the current code. It wanted, and it did, reduce the rates and broaden the base. And it accomplished that by Congress working together with an administration in a bipartisan manner, and they got the job done. And it was hailed as major tax reform in 1986. The problem is that that tax reform lasted but 1 year. By 1987, which was the first year, coincidentally, that I arrived in Congress, Congress was changing that tax code. And since 1986, I'm told there have been 10,000 changes to that tax code. And I would suggest that we can't help ourselves in Congress, and even though we might be well intended to broaden the base and simplify, we're in business every year, and it's likely that the pressures, the political pressures, will mean you'll see a similar pattern in the future. Now, Michael mentioned this, but let me just underscore this. Today, we're at a competitive disadvantage in the global market because of our tax code. We have higher taxes on goods and services in the international marketplace than the countries that we need to compete with. And what makes this so strange, and I hope you can see this one chart, the United States is a low tax country. We rely less on revenues to support government as a percentage of our economy than either the OECD countries or EU. So we should have a competitive advantage, not a competitive disadvantage. And of course, the reason why we have a competitive disadvantage, as Michael pointed out, we're one of the only countries, the only OECD country, that doesn't use a consumption tax, and we rely solely on income taxes in order to not solely, but primarily on income taxes in order to finance our government. As Michael pointed out, consumption taxes, when we developed the trade rules, we agreed that they could be border adjusted. It's not the same with income taxes. Again, putting us at a terrible disadvantage, not only on the location where companies will locate, but also as to what goods will be purchased in the international marketplace where they originate from. In both cases, we are at a disadvantage. So that's why I introduced the progressive consumption tax. I introduced it in December. It's S3005. It's a comprehensive, progressive, pro-growth tax reform. It's based upon a broad consumption tax on all goods and services at a 10% rate. It generates revenue by taxing goods and services rather than income. It's destination-based and border-adjusted. It's imposed on every purchase through the supply chain. So it's the traditional type of a national consumption tax. That's the primary source of revenue, but not the exclusive source of revenue. We also use income tax, and we reform the income tax code. We provide significant exemptions for individual income taxes, $50,000 for an individual, $100,000 for a family. So most Americans will not have to file an income tax return. We think that simplifies a great deal. I was at a Finance Committee hearing today where the ranking Democrat, Senator Wyden, challenged Secretary Lew as to whether we could simplify the way most Americans file their income taxes. Could we get it down to a postcard size form? Well, the progressive consumption tax eliminates the needs for most Americans to file an income tax. It reduces the rates. The top rate would be 28%, which would kick in at $450,000. It simplifies the income tax by only having 4 major exemptions from tax. They would be state and local taxes. It would be charitable deductions, interest on mortgage payments, and deductions for the benefits one receives on retirement and health care from employers. The corporate income tax rate would be reduced to 17%, cutting it more than half. Again, making us, when you look at those rates, when you look at the corporate income tax, 17% top rate, the individual tax, 28% top rate, the consumption tax, 10% top rate, we would have the lowest marginal tax rates among the OECD countries, and we would be at a competitive advantage. It answers, I think, 2 major problems. Traditionally, those who are concerned that a consumption tax would be unfair, that is, that it would hit middle-income families since they have to consume, they're in a position where they would have to pay the tax. We answer that by having a credit mechanism so that low and middle-income households receive a credit and rebate based upon their burdens. It replaces the earned income tax credit and the child tax credit are replaced by a rebate mechanism. So effectively, low-income families who are paying no taxes today would pay no consumption taxes or income taxes, and low-wage families would pay no more taxes than they're paying today. In most cases, would pay less taxes through the use of a rebate. It will be more progressive than our current tax code. It answers the second major objection in that people are concerned about a consumption tax because it produces revenue, more revenue than anticipated, and encourages the growth of government. So we don't want this to become, as Republicans have said, a money machine. Therefore, we put into the law, into the bill, a circuit breaker that gives an automatic tax rebate if the revenues exceed 10% of GDP. That number obviously can be adjusted, but it's meant to equal approximately the revenues we currently generate, coupled with the other taxes, so that this is a revenue-neutral proposal at whatever number we want to set it at. But it would have a circuit breaker so it doesn't produce more revenue than we say. We've gone through some of this, but the advantages here are clear. It encourages savings. It enhances economic competitiveness. A few years ago, then Congressman Portman and I worked together, Democrat and Republican, to increase savings and retirement opportunities for America. Back in those days, America's economic indicators led the world as far as on a positive side, except for savings. this proposal, going to consumption taxes more than income taxes, would encourage savings and help us have the capital that we need in this country for economic growth. It does encourage economic growth, it enhances U.S. trade competitiveness, as we pointed out, because of the border-adjusted nature and the lower rates, marginal rates. It reduces income tax compliance costs. 90% of Americans would not even have to file income taxes, and simplifying the income tax code dramatically. It protects, as I said, low and middle income families from unfair tax burden. So we think this is a serious proposal. We have gotten some very favorable responses. I think the two major hurdles we confront is, first, will there be tax reform? Can we get anything done in this Congress? Can Democrats and Republicans agree on something as major as tax reform? Obviously, that's a question I cannot answer, but I can assure you that I work every day with Republicans so that we can get things done. A little later this afternoon, I'll be on the floor of the United States Senate with Senator Collins, a Republican from Maine. The two of us have introduced legislation to help the craft brewing industry. We work together on issues. I work very closely with many Republicans, and we are all hoping we can find a way to work together to answer America's challenges. The second is Congress or the American people ready for a radical change in their tax structure? I think the answer to that question is yes. I think they understand the current tax code is just not fair and is not really salvageable, and they want us to be bold. So I hope that we'll have the courage to pass tax reform, and I hope we have the courage to think big and pass a proposal such as the progressive consumption tax that I have proposed. I certainly welcome your questions and your comments, and I do thank you for an opportunity to explain this legislation.
Thank you, Senator Cardin. I'm going to start with a couple questions before going to the audience. I must say it's a very nice bill in terms of there's bipartisan support and bipartisan opposition. It doesn't cut down party lines for this type of broadening of the base, so we don't rely primarily on income tax but spread it around. The progressivity issue is a big one, and hopefully you can get that message across with distribution neutrality intent, as well as of course, no new taxes because of the offset. Those are important. I recall you had said before that you don't believe that social engineering via the tax code is appropriate, and I know your deductions are limited as you simplify. Can you explain?
Well, I think when we talk about social programs, I think we're much better dealing with those under appropriation bills where you have annual review and you have a higher degree of accountability than you do with a tax expenditure. So my preference has been that when you look at social responsibilities of government, you're better off taking that through an authorizing committee and getting authorization passed, and then through the appropriators and get the funds appropriated, rather than engineering within the tax code something that will be there forever or has to be extended through extenders, which causes uncertainty and inefficiency. So for those reasons, I think it's always better to do this through the appropriation process rather than through the tax code. I want to make it clear. I think it's extremely important that the tax code be progressive, that middle-income families are protected. I don't look at that as social engineering. I look at that as how do we want to raise our revenue, whatever that revenue number is, and I think we want to raise it in a manner that is more fair than our current tax code.
And under your plan, Senator, you have, of course, the $100,000 joint filer and $50,000 exemption, but then I think you have limited to 4 other deductions. What are they?
The 4 deductions, one is, and they're there for 2 reasons. First, I think each one, there is strong historical policy reasons why we need to continue that, and the absence of continuing those policies could cause a pretty dramatic behavioral change or value change in the marketplace. And lastly, I think the political hurdles of removing them from the tax code would be distracting to trying to get a progressive consumption tax passed. So the first is charitable deductions. One could argue that when you're giving money to charity, you're really not getting any value for that from the point of view of personal value. I know you feel good about it, but it really does represent you carrying on some public purpose with your income. And the question is that should that really be subject to income taxes? So the first exemption is charitable deduction. The second is state and local taxes. This is an issue of federalism. This is an issue that state and local governments are comparable to the federal government. And I think this is a fundamental constitutional issue when you deal with state and local governments. The third is interest on mortgages. And here, I think two things. First, the real estate industry would point out, and their economists have come in, that if we eliminated the mortgage interest deduction, it would have a pretty dramatic impact on the value of real estate. And I think that would be very distracting to the debate on a progressive consumption tax. So for that reason, we have continued the deduction for interest on mortgages. And the last are areas that are in the middle of major policy shifts in this country already. One is health care and the deductibility of employer-provided health. Unless we change our health care system, we rely on employers providing health subsidies to our workforce, and we don't want to jeopardize that in the midst of the current reform. The other deals with retirement savings, and we already are way under where we need to be on the amount of monies that are being put into retirement savings in this country, and we don't want to have a negative impact on retirement savings. Remember, this proposal is aimed at trying to bolster savings. So they're the only major modifications to the income tax code.
Thank you. Question from the floor. You've partially addressed it, but it's a specific, again, to progressivity. Can you explain how this consumption tax fits with the information given us by Thomas Piketty? How does it affect income inequality?
Yes, well, again, what we're doing on progressivity is saying that today there's a large number of taxpayers, a large number of people who are poor, who don't pay any significant federal taxes. Because of the federal income tax where it kicks in, they don't pay any taxes whatsoever. Through the earned income tax credit, the working poor may be relieved of all their tax liability. So if we eliminate the income taxes for that group of people, they aren't benefited by the elimination of the income tax, because now they would have to, absent some rebate, pay consumption tax, because they spend almost all of their money on consumption. In some cases, they spend more than they earn on consumption. So what we have done is built in a rebate based upon the income of an individual, based upon family size, and it's similar to the benefits that taxpayers receive today under the earned income tax credit and the child credits. So bottom line is they get these rebates. We're looking at ways that they can get them simultaneously with their consumption through the use of debit cards, and we are working in a way to get that done so in reality they do not have to lay out the money. We also are looking at ways in which we could combine such a debit card with other benefits that individuals might be receiving from government, so we can streamline the process for income distribution issues to make it a simpler way and less costly for administration.
Thank you. I'll just follow up simply and say Professor Michael Gratz, who has also put together a roughly analogous to the Senator's plan, had it scored by the Tax Policy Center. Number one, found it was progressivity or distribution neutral. It did not change distribution aspects of the tax system. And secondly, of those 150 countries that have implemented it, they did not go to a regressive system for it. So it's a well-worn path. Next question. How will this affect internet sales? Will this be applied to internet sales?
Remember, this is a national consumption tax, so therefore the internet sales really do not impact this, because if it is domestic, it's going to be subject to the same consumption tax. The products that are sold are going to be subject to the same consumption tax. If it's the final purchaser is the consumer, then that consumer would already have the taxes in the internet price. If that person is using that product further in the marketplace for additional products, then there's a subtraction method that they could use when they finally sell the product, so that they don't pay the consumption tax twice. So it really makes no difference whether it's you purchase the product at a retail or wholesale location or internet. It is going to be treated identical for the purposes of the imposition of the tax.
Okay. Senator, I'm going to continue with questions. I got 3 or 4 more, but if you have to run, you'll just have to let me know. So I'll continue.
I think I can take these last 3. I'll be fine.
Okay. Have any other, at this point, have any other senators signed on as supporters, or do you have supporters identified in the House? Characterize the support, if you would.
There are many senators and congressmen who are very much interested in the proposal. I have purposely not sought co-sponsors at this point because I want to get the debate going. We put out the draft in December, which, as you know, is right at the end of the last session. We have not refiled it yet in this Congress. That's intentional because we want to get back input from people who have a chance to see the actual language. We're also waiting for the joint tax to give us the tax scoring because we may have to adjust. We know that we are using scorekeeping that does not take into consideration dynamic scorekeeping, and I understand that and play by those rules. So we may have to make certain adjustments, and I think people are waiting to see what that will be. But I do caution people, if we have to make adjustments, that there's a rebate mechanism in the bill. So if we miss by imposing at too high of a rate, those taxes will be rebated. And this is meant to be revenue neutral.
Next question, Senator, verbatim, Senator, to your knowledge, is there any major country that has territorial taxation that has no national consumption tax to offset the loss of tax revenue arising from going to territorial?
No, I don't know of any country that doesn't have a consumption tax that has a territorial tax. As you pointed out in the beginning, if you look at the list of countries that don't have consumption taxes, most of those are countries that do not have, they're not major players in international commerce. So therefore, moving towards territorial business taxes is not part of their game plan. They haven't gotten that far yet, most of the countries, other than the United States. Now, we don't use territorial, but we do have, the United States is the only major economy in the world that does not use a consumption tax.
Thank you. Next question. This tax proposal uses a consumption tax as an add-on tax base. How do you overcome strong resistance to an add-on tax in the Senate Finance Committee?
Well, it depends on how you say an add-on tax. I look at this as tax reform, real tax reform. We're not, whatever dollar amount we want to collect, let's put that on the table. How do you want to collect it? Do you want to collect it under the existing tax code that puts American businesses at a disadvantage, that allows the average taxpayer to believe that he or she is not being treated fairly with their neighbor, that has lots of ways in which people with sophisticated tax planning can avoid taxes that other people can not avoid, a tax code that directs how businesses should deal with their business decisions rather than letting them make them based upon what is in the best interest of their business. That's the decision. Or do you want to go with a proven method where America can have the most competitive rates in the industrial world and where we can have a much more efficient, simpler, pro-growth tax code? So this is not an add-on tax. It's how we collect whatever revenue we say we need. This is going to be revenue neutral. So it's not an add-on tax. It is basically how we collect the revenues we're existing that we collect today. How are we going to collect that in a way where working families will actually pay less taxes They may pay different taxes, but they're going to pay less taxes.
Right. And my understanding, as you know, Senator, is that the last major tax reform in '86, so long as it lasted, with a Democratic Congress and a Republican White House, the couple principles were revenue neutrality and distribution neutrality. They thought they'd achieved it, which is why they agreed, and I think this does nearly the same thing.
You're absolutely right, and I must tell you, I'm very encouraged when I talk to Democrats and Republicans here. Just to a person, they agree that that has to be a precondition of any tax reform in 2015.
Last question, I think, for you is this tax is what about resales like thrift stores, you know, sort of the used goods sale? What do you do with that?
Well, again, it depends on whether they've added value, if it is being sold for, if you haven't added value to the price of the product, there would be no additional taxes imposed. So if you're taking a product that's already paid its full consumption taxes has already been built into the sale, and you're reselling it at a less price, there would be no additional taxes imposed.
Thank you. There is a question more directed to my comments, questioning whether Canada raised the rates post-NAFTA. I actually looked that up. It looks like they had a national sales tax of before NAFTA, had a 13.5% manufacturer's sales tax before NAFTA, that that manufacturers were concerned that it hurt their international competitiveness. And by 1991, they had switched to a GST, which is, you know, which is their name for their consumption tax. So it was just during NAFTA negotiations, but pre-NAFTA implementation, that they switched from the manufacturer sales tax to the GST, which was border adjustable. Then we had to pay, of course, after it went into force, but slightly before NAFTA implementation. Is there any other questions? I think I've gotten them all in the question box. Senator, this is a great proposal. We at CPA, as you know, are dedicated to informing folks on this is a high priority, I'll put it, for us to inform folks, to get people to consider it, to comment, to engage in the debate, to get past the regressiveness or money machine issues of old, because you've addressed them cleverly already, and really appreciate your time.
Thank you, Mike. Appreciate it. Talk to you all later.